Welcome back. It's the start of a brand new week. The Gift Nifty is suggesting a lower start, a breach of 22,000 on the Nifty, and we're coming off on the heels of a very tough week. Last week, the Nifty and the Sensex were down 2%. The mid and the small cap universe, the mid cap indices were down close to about 5%. The big pivotal event to watch will be the FOMC meet. It starts tomorrow, but the Indian markets will only react on Thursday morning. It's a two-day event on 19th and 20th. And the question is, after the persistently high inflation out of the United States, last week we got the core wholesale inflation, will the Fed delay its rate cuts? But to talk more about the Indian markets and stocks, Prakash Diwan is now with us on the show. Prakash, one of the big stocks to watch will be LIC, where, they have effected a wage hike of about 16 to 17%. And there is a bit of a retrospective impact. How will shareholders view this, the impact, the financial balance sheet impact it will have on LIC?
Good morning, Rima. So I think there will, of course, be some sort of a negative impact, not just sentimentally, but also financially. But remember, this is something which is not out of the blue. It's just that the quantum and timing was uncertain, and that's kind of come through. And essentially, what this does is it kind of takes this possibility and the overhang of this possibility out of the way. So I think once it finds a bottom, once it finds a little bit of a consolidated zone that it kind of moves into, it's then that people will start penciling in the kind of robust growth that LIC has made. And remember, LIC has a lot of other moving parts. It's got this whole money coming in from some of the claims, some of the refunds. It also has a lot of the yield-based improvement in its debt portfolio. So that's definitely likely to have positive impact, which will set off a little bit of this negativity. But then the big question there is valuations for a lot of the PSUs that it sits on within its portfolio. Those have come off. So, from that perspective, also the treasury income is going to be a bit subdued coming in this March end quarter. So all in all, it'll probably, get you into a zone where you could start looking at adding to it because, the elevated levels that you saw in the month of January, those probably seemed a bit unreal to sustain. And that's exactly what the market has proven. So at lower levels, I'm sure there will be a lot of value seeking that will lead its way to money coming into LIC. But you'll have to give it another couple of weeks for all of that to happen, or possibly first half of April is the best time to look at getting into it. But at some 900 levels, it gets you into that very favorable risk-reward situation.
Okay, the other space that is very hot right now, Prakash, is EVs, right? The government is giving out some policy incentives. They're clearly, riding on this China plus one theme, so looking to make India a manufacturing hub for global EVs. There are two-part question to this. One, would you be positive on a lot of the auto ancillaries that supply to the EV ecosystem? And if yes, which ones would they be? And two, would you be concerned about the current incumbents? Or do you think that given how expensive, the likes of Tesla, etc., until they don't start manufacturing in India, it's not too much of a concern? Your thoughts?
Yeah, absolutely, Sonia. So let me take the second one first because it's easier. The impact on OEMs in India is going to be minuscule. People might kind of read a bit too much into saying Tata Motors is going to face a huge competition, but it's actually not the case because Tata Motors has a price point, a range of price point, which is way, way different than that $35,000 that we're talking about, $3,500 that we're talking. Remember one thing, in India, the cars sold in the 25 lakh INR plus zone, that segment is just about under 3%. So it's not that, there's a huge market that's going to get disrupted with this. This seems to be a very clear paving the way for Tesla or maybe a VinFast or somebody, of that caliber and scale to enter into the Indian markets. While the government had promised this would happen, they didn't want the disruption to impact its fledgling EV market itself. And they've done a very good balancing act. Specifically, if you look at the auto ancillaries, which have the scale and the quality to be able to supply to some of these larger premium EV players, you'll probably have a Sona Comstar. You'll probably have, to a large extent, the Motherson Sumi Group. Which company out of the two you can choose, but I think Samvardhana, which is more global in its in experience and exposure, will probably be able to participate, and some of the Minda Group companies as well. So there are auto ancillaries which have the wherewithal to do it. Now, when that happens, don't read too much into it that this is going to be immediate because this will take time. The setup will, whether new OEMs will take time. The backward integration will start. The vendorization will take time. So it's still about a year away before all of that happens. But yeah, these are the names that you could probably look at going forward in terms of being a bit more positive.
Prakash, hi, morning. OMC sold off, right, aggressively on Friday. Although there was some recovery, 3-4% recovery from the lows. HP, of course, took the biggest knock. What's the view there now?
Good morning, Prashant. I'm very positive on that. Even that day I mentioned, this is giving you a very good entry point for an overreaction to a belated, price cut on retail outlet level prices. So, it is something where, and you have to, of course, accept the fact that till probably first half of June, till the results are out of this election season, you will not see any kind of ability to move prices back. But my sense is this is something which is not going to impact some of the players which have a decent balance between marketing and refining. And by virtue of that, IOC stands out as a winner. I think HP would probably be more impacted because it has a significant reliance on marketing revenue in its overall contribution on the P&L. But IOC, look at where it's traded, Prashant. It's still on a trailing basis, it's still trading at less than 5p. So you're not overpaying for anything in spite of these short-term blips once in a while. But the long-term story is that the kind of asset base creation that they have been responsible for in the last 5-7 years is something which will pay them for the next 5-7 years very easily. So they will keep on reaping the benefits of that. I think it was a lovely the opportunity to buy. I'm sure a lot of the domestic institutions who have to allocate some money to this sector and to PSUs, it's a great combination, right? And you're buying value. In this market, if you can get value and not overpay for growth, it's the ideal sweet spot of thought. So I would believe it's a great entry level for that, and specifically for IOC.
With us, Prakash, any thoughts on Coforge? It's been one of the better performing mid-cap stocks. And now they've gone ahead and taken approval for a very large fundraise. 3,200 crore is about 8% of the company's market capitalization. So the sense is that they're gearing up for a large acquisition. Do you like Coforge in the mid-cap IT basket?
So, Rima, there's definitely a lot of stuff happening within some of these largest mid-cap IT names who are trying to see this opportunity for inorganic growth where others are floundering. The people who don't have scale or who are dependent on some of the conventional revenue streams and don't have new age stuff like AI and ML backing it up. So Coforge has successfully done a lot of restructuring in itself for the last 4-5 years and created value. I think they know the game. They will definitely would have identified certain targets for that. Now, it all depends on what price they end up paying and what's the kind of contribution the new acquisitions will make, how soon it makes, because timing today is more important for IT names to kind of make that comeback, and your return ratios will have to really inch up very quickly. So I would wait for that, not jump at it. But yes, it's a great step in the right direction. But within that space, I just want to leave you with this thought. There's one company which continues to grow globally. Of course, the parent is also growing in different areas, but the rub-off effect is that they don't need capital, but they can continue to march ahead in terms of building a book which is very, very formidable, and that's OFSS. We saw the numbers last quarter. I think that was a turning point, and you could expect those kind of numbers to continue to happen. So OFSS is something where this whole comeback in terms of cleansing of the fintech platforms and the sanitization of processes. That is something where OFSS will deliver a very stupendous kind of product mix. So I'm quite positive that, of course, it's run up quite a bit. We used to see it at 4,500 zones last year, but then everything else which is promising also has. There's much more to go going forward from this company.
Prakash, is Solar Industries a stock that you've ever looked at?
Oh, absolutely, in awe. Always looked at it in awe. Look at where it has been all these years. It's been a multi-bagger in the true sense, and the long wait that it made to made investors do was primarily because they expanded a lot of capacity in anticipation of the defense play coming in, not just depending on infrastructure in terms of their explosive product sales. And the defense thing took some time, but when it did, it's been a juggernaut which kind of has just started moving. In fact, if you listen to the calls, if you listen to the commentary of the management, the order book, not just the order book, the potential that they have as market leaders in this space, supplying to so many of these, new developments that are happening on the weaponry side in defense, makes you believe that they could probably do a revenue which is about 3.5x in the next few years, couple of years, maybe 3 years. So if you have the patience and if you don't get worried about the kind of valuation that it attracts, which it always will, it's definitely something which can be very rewarding. But people do get a little bit put off with the rich valuations all the time. It has been trading even in bad days. So even on bad days, you probably don't get it cheap. But if you were to ever build it into your portfolio, I think it will pay off irrespective of what levels you get it.
Prakash, just a couple of more names, right, that I wanted to view on. One is Coal India. So we saw a bit of a sharp cut. And I read something interesting and this is, of course, perhaps something will play out over the next couple of months. So LNG, natural gas, basically, there is a big glut which is expected starting the next couple of months. And since, coal and sort of gas are, in a way, interchangeable sources of power, there is a strong correlation, apparently, with where coal prices also head. Any thoughts, Coal India from here? And the other one is Bajaj Finance. Stocks underperformed quite a bit. On Friday, saw some signs of life. Ended about 2.5% higher in a down market. Just your thoughts.
So, Prashant, I think Coal India very clearly, it's the market was looking at some sort of a trigger to pare down the kind of valuation it would start attracting. If things didn't keep moving in the same linear fashion that they have for the last, let's say, 2 or 3 quarters. But you need to understand that Coal India is trying to fill a huge yawning gap that we have in our energy security. It's not something, especially on the conventional side. While solar and wind and all is going to take fairly long to kind of, start percolating down on the utility level, it's going to be dependence on this. And when we correlate or, juxtapose that with the fact that the Indian economy is likely to grow on all the conventional areas of infrastructure, capital goods, defense, railways, there is no reason why energy will be an area which will have any sort of a oversupply, irrespective of the potential glut that we are talking about. Now, look at that glut. That could get absorbed by so many other businesses, so many, whether it's city gas distribution, which Coal India doesn't supply to, or it could be fertilizer companies, which again, Coal India has got nothing to do with. So with cement, fertilizer, CGD, all of that, I'm not worried about that glut. In fact, it's always good for our economy. And we are building up the infrastructure to absorb that. So Coal India will continue to march ahead, given its reserves, given its potential to increase output at this formidable rate. It might consolidate, given the fact that it's run up from 230 to all the way, almost kind of doubled, close to doubling in less than a year. So that is going to have some sort of a pause. But I don't think it's something which you could write off very easily. And of course, on Bajaj Finance, the commentary is very clear. They've tried setting expectations in line, and they've talked about a little bit of a compression on the NIMs, which is evident from whatever we see. And once the RBI, the rap on the knuckles that they got is out of the way, you could probably see some sort of a respite coming. But till then, given the fact that the competitive intensity is growing so significantly, I would believe it will probably remain under some sort of a pressure. And it has to continue to perform at top-notch, parameters to be able to justify the valuation. And that's the problem with Bajaj Finance. Any slippage in that, and it kind of gets beaten down. But I would wait for the RBI thing to get sorted, and of course numbers in March kind of giving some sort of an indication that things could not be as bad as they've been for other NBFCs.